Hey guys, Charlton from Leveraged here. Let's chat about one of my favorite topics, index fund investing. Investing in index funds is probably the easiest long-term strategy that requires next to no skill and minimal ongoing work. This strategy beats between 95 and 99% of individual investors and takes less than an hour to set up. So how do you start with index fund investing? For context, an index is a method of tracking a group of companies. With something called an ETF or an exchange-traded fund, people can benefit from the long-term returns of an index through a single investment in an ETF. Using the right ETF will invest small amounts in some of the biggest companies in the world. For example, using the right ETF may include investing in Amazon, Google, Facebook, Tesla, and even Crocs. So what about waiting until the market crashes? In theory, this is a great idea. Everything is cheaper, and when the market does hopefully recover, you have amazing returns. However, countless articles suggest that timing the market just doesn't work. Sure, the market does not always rise, but the S&P 500, or the biggest 500 companies in America, has returned on average 10.21% annually. And while average returns of 10% may seem small initially, they really add up over time. $1,000 invested at a return of 10% a year for 10 years will grow to $2,600. Invested for 20 years, the initial investment will grow to $6,700. But now it starts to get interesting. In 30 years, the initial $1,000 will equal $17,500. And in 40 years, it will equal $45,000. Invest consistently or with more than $1,000 and you can imagine what may happen. So what about actually purchasing an ETF? While the first step in investing is the most important, I can imagine this is the part that most people don't do. For those still here, awesome. Good stuff. I personally use an online broker. This effectively is an app on your phone or computer. It almost is as simple as buying something off Amazon or eBay. My personal preference of broker is Self-Wealth, but Superhero, Raise, or Spaceship may also be good options. What is great about online brokers such as Raise and Spaceship is that there's minimal or no minimum investment amount. So what ETFs are actually worth buying? Personally, I look at Australian and American ETFs such as the Vanguard 500 Index Fund. In this instance, Vanguard is the company that has established the ETF and VOO is the ticker symbol or unique identifier that investors use to purchase the ETF. Other great options include the Vanguard Total Stock Market ETF, which tracks small, medium, and large US companies equally, or the Vanguard Growth Index Fund, which seeks to track the US's largest growth companies such as Apple, Microsoft, and Tesla. These ETFs are great as Vanguard charge incredibly low fees. And that is it. Please don't take this as financial advice, but rather just something to consider. Thanks for watching, and I'll see you in the next video with Daniel.